In a significant stride toward reshaping Colombia's pension landscape, the nation's legislative chambers have enacted a pivotal clause within a sweeping pension bill, setting the stage for a potential windfall totaling $750 million in augmented management fees for private fund managers. This landmark amendment, recently ratified by the Senate, represents a seismic shift in the fee structure governing private pension funds, affording them the latitude to levy an additional management fee of up to 0.7% on assets under their purview. This measure, supplementing the existing upfront charges, promises to substantially augment the revenue streams of these obligatory pension funds, which collectively steward an astronomical sum of 405 trillion pesos. $104 billion, and cater to the financial well-being of a formidable demographic constituency comprising 19 million individuals. At the helm of this legislative maneuver stands Senator Gustavo Adolfo Moreno, a proponent of fiscal autonomy and a vocal advocate for empowering Congress to arbitrate management costs independent of governmental oversight. Moreno's assertion of legislative prerogative underscores a broader imperative to fortify the financial resilience of private pension funds, particularly amidst the backdrop of impending reforms poised to realign the demographic composition of the pension landscape. However, amidst the chorus of acclaim heralding this legislative milestone, dissenting voices, notably led by President Gustavo Petro, echo concerns regarding the efficacy and integrity of private pension funds. Petro's trenchant critique, buttressed by assertions of lackluster returns and calls for the repatriation of overseas investments, underscores pervasive anxieties regarding the adequacy of the prevailing pension framework in safeguarding the retirement security of Colombian citizens. Against this backdrop of contention and reform, the approved amendments precipitate a fundamental recalibration of pension contributions, delineating a bifurcated paradigm wherein the initial tranche of salaries, capped at 2.3 times the minimum wage, will be siphoned into the public pension reservoir, with the residual balance earmarked for private pension provisions. This stratified approach, emblematic of a concerted effort to rebalance fiscal obligations and engender a more equitable distribution of resources, epitomizes the legislative resolve to chart a course toward pension reform. Looking ahead, the legislative agenda stands poised for further scrutiny and deliberation, with Labor Minister Gloria Inés Ramirez expressing sanguine anticipation for the Senate's forthcoming approval of the comprehensive pension reform. As the contours of Colombia's pension ecosystem undergo transformational metamorphosis, stakeholders brace for a landscape replete with challenges, opportunities, and the promise of a more robust and inclusive retirement framework.